folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, May 16th, 2008. Well, as we get into today's video, folks, we're going to cover a little bit more on the oil trade, which we covered yesterday, and the amazingness of that trade itself, how it affects the market on the intraday levels and overall in the psychological aspect of the market. We're also going to cover a few odds and ends in regards to the technical chart patterns that we're developing here, whether or not we're at a double top, whether or not it's an M pattern formation here on the daily chart, whether or not we're seeing head and shoulder formation patterns in the overall market. And we're going to continue to look at these different chart patterns that are key technical patterns to find out when this market is going to fall. Alright, we're still at the upper end of the range from the call of InTheMoneyStocks.com. We're at the very upper end of it, to be honest, and we can see that on the charts, and we'll show you guys the upper end of that. We're also on the upper end of the oil range here now, and the interesting thing is today we had a big push up in oil early. We sold off on oil where oil was only up about $1 and change, and then they were able to rally in the last 15 minutes of oil going into the 2:30 p.m. Eastern time frame and to push oil back up nicely and close it strong. Now, there's a couple things going on in this oil arena. Number one, you have Goldman Sachs coming out and saying, we think oil by the end of this year is going to be $141. Right there, that gives oil a bid because it's Goldman Sachs, and Goldman Sachs is the gold standard of everything here. When it comes to every call in the market, whether it's an upgrade, downgrade, or a commodity call, Goldman Sachs will carry weight, and it did cause some initial buying today and a decent close on oil. In addition, you had the dollar getting hit today. Alright, this is the first relatively big hit the dollar's taken since it's rallied off the lows, since we had called for that a while back, and that's to be expected. You're going to have a little fluctuation here. Nothing goes straight up, nothing goes straight down. Now, the interesting thing that's coming out here, and this is going to be beautiful, and we're going to get right into the charts here, but this is so fascinating to me, is this. Today we had a consumer report here, a consumer confidence report that came out at 10 o'clock today. This consumer confidence report showed that the consumer, meaning the general public out there, had the worst feeling on the economy since 1980. That's approaching 30 years ago. Alright, so let's take that as a whole. So you have Main Street, worst in 30 years. Almost 30 years, about 28 years now. You have Wall Street, off the lows here, rallying back. Which one's right? And this is the beauty of the situation, guys. And this is where you gotta in many ways stick your neck out and try to capitalize. And that's what we believe at InTheMoneyStocks.com we're trying to do here. Alright? You have two divergences, and they're a huge divergence. You got Wall Street, Main Street. One of them's right. Which one? That's the question. I personally happen to think that Wall Street knows less than Main Street. Wall Street is more manipulated. Main Street overall will, in the long run, win. Because let's face it, this economy runs on consumer spending and all that other stuff. So in any case, this is the divergence. This is the enigma that is facing the market right now, and the market right now is continuing. Now, granted, the markets were basically flat today, and I'll show you the chart of the ES here. You can see that we were down for a good portion of the day, but you had the nice little bounce up in the early afternoon as volume got very light, and then we rallied back up. And there are so many indicators here that are pointing to a fall in the market, yet it's just not happening. And there's a few reasons for that. So let's go over this ES chart. This is a fascinating ES chart to talk about. Number one, here you have the 10 o'clock number coming out, consumer confidence. Market started to sell off on that. Also, you had oil up here quite a bit in the morning, and that also is putting some pressure on the markets, because obviously it comes down to how many dollars out of the pockets of Americans, laying out for gas and oil and all that other stuff. So the markets are falling. Nothing drastic, but the NASDAQ was down about 20 points here or so at the lows. Now you had oil begin to get a little bit of a drop. And what happens, we've talked about the oil trade. And the oil trade goes as follows. The markets get a little bit, the oil begins to fall, the markets begin to move up. Oil begins to rally, markets begin to come down. So here you have oil moving up, and then you come into this time frame where the markets begin to pull back again. And you pull back right into a key moving average cross here, a nice little necktie of the 200 moving average and the 20. Alright? Now this, right at this time frame, and this is very, very interesting, you start to get a little bit of a bid, but what happens here is the beauty of this oil trade, which is I've been noticing every day for this week, and that is this. Alright, and listen up to this one. You got the oil contract basically closing at 2:30. Alright, that's when pretty much the last goes through, and oil doesn't move much after that time frame. And every day this last week, and partially of last week as well, so this past week and the week before, we've been seeing that as soon as that oil contract closes, the markets get a bid. Alright, and this has happened every day, especially this week. And you've had a little bit of a push into the close, and actually it's been a very nice push, and you can see that continuing here. Alright, a push up into the close, and again, my analogy, or my analysis of that, is that you basically have everyone expecting oil to go up every day now. And as soon as oil closes for the day, it's kind of like a relief, a psychological relief. Alright, it's done, and when we know it's not going to spike $2 or $3 more anymore here, you can go look and we can pick some stuff up in the market. We're pretty much safe. We know it's only this high today. We'll worry about tomorrow when it comes. Let's buy into the close. So that's my basic analysis of the psychological aspect of what's going on there. But it is fascinating. And I can show that to you on the NASDAQ intraday as well. Let's take a look at the NASDAQ intraday. Alright, here's the sell-off early. Oil's up a lot. You got the dollar week. You got the business report that came out on consumer confidence down here. You get oil to start to drop. That gives the market a little bit of a bounce. You get a little pullback here in the markets right into that 20 moving average. And then you get a little retrace here, and you have a little pause candle right here. Well, guess what time frame this is approaching right here? This is the 2:30 time frame. Sure enough, as soon as you get that little bit of a pullback here, oil closes and the markets rally into the close. Now let's go back to the ES, because this is even more fascinating to me. And this is why this market is very, very close. Now, who knows if we go a little higher or what goes on here. I've been shocked that the markets have been able to hold up this well, but if there's one thing I do know about the markets is that they're able to sustain things for longer than expectations. And it's psychological, and everyone out there, even myself, you know, that's the key, is that, you know, if I believe something, there probably are a bunch of other people believing the same thing, and it can't do that exact thing, so it's going to wait a little while to react. So as we see here, another fascinating aspect. Look at the sell volume here, guys. And this is partly due to options expiration too. But nonetheless, look at the drop, look at the volume. Look at the rally start, look at the volume. Alright? Look at the little pullback, look at the rally again, look at the volume. Alright, this is no joke, folks. You need volume behind any type of move. So, long story short, the markets basically ended flat. You had the NASDAQ down about, let's see here, let's get a quote on the NASDAQ here, and we see the NASDAQ down about 5 points, the Dow down about 6 points, and the S&P up about 1.75. So it was a basic flat market, nothing doing all day for the most part, but the oil trade was key. Oil now at 126.29 right now, as I'm getting a quote come across my screen, and we can look at the USO. And obviously we've been talking about how we think this point right here was the top, and we're right at that top end of that. Alright, you can see we actually were a little bit above it, but you sold off to basically close right in line. You closed actually a couple pennies above. We want to look now to see if there's any confirmation upside going on here. Alright, and that's what we're going to find out next week. Do we have one more push up, or is it done as we thought it is? But you can still see that little channel here, and a possible move to the upside, but oftentimes this is the fake out. Alright, so let's see what happens next week. We'll continue to follow the oil trade very closely. This is one of the most amazing things we've seen. Alright, the credit crunch was a historic thing. This oil situation is historic as well. Now, there were a couple of key factors here coming in. You had the Saudis saying they're going to start producing 300,000 more barrels a day, basically starting now, from what I've heard. You also have them ceasing to fill the petroleum reserve in the United States as of July. So starting in July, all the oil that would fill that reserve is now going to be put on the market. So in my opinion, the oil will begin to view that in the coming weeks, and that's going to start to react. It always reacts before it happens. Alright, the market always looks ahead, never looks back. So it always is seeing the future, so it will react to what it sees in the future. And again, I do happen to think that these prices are extremely pricey here, and while it could go a little higher, this is virtually it. And once we see a fall here, it is going to be a dramatic fall. You're going to be seeing oil come down to $100 in a matter of weeks. That's my opinion, personal opinion, and obviously, as I always say, consult your financial advisor. You know, that's all there is to it. You know, it's just my speculation, but in any case. So we'll continue to watch the USO. Now let's look at the SPY on the daily here. SPY still in this range here, our upper end of the range. Look at that. Right underneath this 200 resistance level. The one thing I would point out is the oil trade does dictate that if oil falls here from 125-ish, 126 where it is now, down to about 120, that will affect the market. Once it gets below the market, it trades in its own range and kind of does its own thing, unless it's a huge drop or rally. But needless to say, we've seen here that it's precisely affecting the markets in the $120 to $127 range. So when oil falls, the markets move up. So should we see the fall start next week, you may see a little bit of a break of that 200. In our opinions, that would be a pierce of the 200, and this is a very extended rally, extremely extended, and going back to the idea of Main Street versus Wall Street, which one's right? And that's what we're fighting right now. That's what the charts are trying to tell us. The charts are telling us this market's done. The charts are telling us this oil's done. But what is Wall Street trying to push? Are they going to rally this? Are they going to continue to spike this on speculators? And that's where we're sitting here. Continue to watch the low volume nature of this rally. No doubt about it, folks. All right, that's about all for today on this Friday afternoon. I encourage you all, those that want to learn these technicals, come join the intraday stock chat. Also, we're doing the webinar tomorrow. And again, that's an online seminar in a chat room with voice. You log into a chat room, you view our whole screen, our whole charts. It's live interactive. You talk on the phone. It's a 1-800 toll-free number to the moderator, to the teacher, and it's a one-on-one. So come join that. Log into the site. You can view it there or email us. Take care.